The stellar gains of America's tech titans have dominated discussion lately, but is there value to be found among smaller companies? With me to discuss that today is Greg Dean from Cambridge Global Asset Management. He manages Cambridge's Smaller Companies Fund. Greg Dean, welcome to Morningstar.
Lex, thanks for having me.
I thought I'd start, first of all, of course, with the obvious question, which is the election. Get your thoughts on that. A Biden presidency and a Republican-controlled Senate is being touted by some as favorable for assets, particularly Asian assets. What's your view on that outlook?
Well, it's certainly topical and has been for several months. One thing that's important to note for us is, we basically try to avoid making calls on commodities, currencies, interest rates, and government policy just as a very function of being in the small cap market. We're thankfully very immunized from those very sort of binary type outcomes, and they're outside the control of most companies. But I think what we're seeing, and actually today was a very good reminder that these moments in time catalyze big shifts in monetary policy and fiscal policy, and companies, entrepreneurs, entire industries can be reshaped overnight, or what seems overnight. And I can recall back to 2016 when the banking sector went from the whipping child of the prior president to one that was all of a sudden quite favorably viewed under Trump, seemingly overnight. And what we're seeing with Biden is the concerns around his tax policy and that becoming enacted in the months post his inauguration, causing a lot of entrepreneurs and a lot of companies to sell really, really good assets because they're worried about, higher capital gains tax. That's probably been the biggest impact that we've seen or could see in the shorter term. But I think, as you pointed out, the markets typically like clarity, and if we are gridlocked, that probably puts a damper on the outlook in the shorter term. But stock markets don't react to elections over long periods of time. It just in the short term feels like they do.
Mm-hmm. Okay, let's talk about definition. Smaller companies, obviously in Australia, has a different definition in terms of size. What do you consider to be a smaller company?
So, our range is 250 million Aussie to a billion, or to 10 billion, I'm sorry. And that sweet spot for us really sits in the 1 billion to 5 billion range, but we have leeway on either side to go down cap, as well as hold some of our best ideas as they mature into sort of more mid caps.
Mm-hmm. It's a youngish fund. It's been available to Australians for about 2 years. How has it been affected by COVID?
That's a great question. So, one of the core tenets of the fund strategy is really resiliency. And I'm happy at how things have performed, always sort of, cautiously pleased, because things can go wrong overnight in this job. But the businesses that we own have been very well insulated from a lot of the uncertainty that we've seen, and in many cases have taken advantage of a lot of the economic weakness, whether it was distressed competitors or an opportune time to right size the cost structure. We've seen tremendous resiliency amongst the portfolio, and one of the big factors that we've been talking about for a long time is we try to protect clients' capital through the avoidance of leverage, especially if it's just sort of permanent leverage, leverage that is required to earn a real, an acceptable return. Some business models will just earn a very, very low sort of 2% return on assets, but leveraged 6 times can earn an adequate return on capital. We tend to avoid those companies.
Let's talk about where you're seeing rather opportunities. I noticed that among your sector allocation, 21% thereabouts is dedicated to consumer services. What sort of companies are you looking at there, and what's your rationale for that?
Yeah, so consumer is this wonderful hunting ground that is I don't want to say a catch-all, but it can be very quite broadly described. And so within that bucket, we would have a company like Restoration Hardware, which has been one of the stronger performers for the fund this year. And I think if I told you, or anyone told me back in February when we were buying the business, when all their stores were closed, and the stock was trading at sub 10 times earnings, that, you know, we could make 3 times our money in the span of 7 months, I would have said that's impossible. But, you know, with what we've seen as the trends have migrated in terms of not being able to travel and spending more at home, all of a sudden, you know, $6,000 couches have become a much more popular purchase for a lot of, you know, well-off families or individuals. And so, you know, Restoration Hardware's business this year has accelerated, and also relative to the sort of the concerns that people had that brick and mortar retail, you know, was really going to suffer in 2020 with a lot of shops closed. They reminded people that, you know, over half their sales are generated online. And I think we caught a moment in time with that company where people forgot a lot of the strengths of the business and were really focused on what could go wrong. And, you know, as were we always worry about what could go wrong. So we sized the position accordingly. But that would be, you know, one example that's sitting consumer that we think was, you know, sitting there and obvious to many, but not many took advantage of it.
Mm-hmm. And on that note, finally, how long would you advise an investor to stay in your fund to realize the value add?
So our time horizon in terms of when we're looking at companies is 3 to 5 years. We'll actually, you know, discount cash flows over a 10-year period, but we're really trying to understand over a 3 to 5 year period, you know, if the scenarios that we believe are likely play out, what's the business worth? And over a shorter time frame, say 1 to 3 years, what if we're wrong? So I'd say that sweet spot probably sits in the 3-year interval for clients to really consider a small cap allocation.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.